Right, hello everybody. Welcome to today's podcast. This is Adrian Boothie here. It's the 21st of September 2020, and it's the Trend Signal Trading Podcast. And as the name suggests, of today's session, it's a little bit weak on the stock market at the moment, and we're going to be talking about that today and other movement that's taken place over the last few days. So, joined as ever with Jerry Miller, our Chief Analyst and CEO. Hi, Jerry. How are you?
Yeah, hello, morning everyone.
Let's, the purpose of this is to do a sort of review over last week, but actually, massive chunk of movements already happened this week. Do you want to give us a quick rundown, Jerry?
Yeah, equity is definitely weaker. I mean, you only have to look at the DAX, the S&P, FTSE really weak, and you might wonder, sort of, is this a carryover from Friday, Thursday, Wednesday? There was quite a bit of disappointment over the Federal Reserve's I don't know, steady as she goes message, keeping rates at record lows for many years to come, but the market seemed a bit disappointed. But it's a different thing this morning, Adrian. There's been this leak by Buzz from BuzzFeed, and these are reports that banks file with the US Treasury, and they're called SARS. Not to be confused with a horrible, ghastly virus, but they're referred to as suspicious activity reports. The banks have to file them I think it's with the Treasury. Anyway, it's sort of uncovered all sorts of dark dealings and money from oligarchs going via London, New York, all sorts of stuff, offshore centres and the like, and it's really undermined the banking stocks. I was just looking at HSBC, and there's a report that HSBC and Standard Chartered also hitting the skids down to a 25-year low or 22-year low, I think, on Standard Chartered. So these are massive moves.
They're very big Far Eastern exposure, don't they? Both of those banks.
Yeah, they're all. I mean, they're based in the UK, but actually, the vast chunk of their business is in the Far East and in China. So yeah, so it's a problem for them, and they've got quite a list of issues to deal with, and the banks weren't exactly the flavour of the month, were they, Adrian? I mean, when you compare,
they definitely weren't. No, and I think sometimes you look at some of these stocks, they just need another excuse to sort of sell them, and these traditional stocks haven't been faring very well in the recovery in the stock markets, unlike the tech stocks, and that's why the FTSE has been hammered so much today, because banks as a percentage and traditional blue chip stocks a much bigger percentage of the FTSE than those other indices.
Yeah. Having said that, it's sort of on a par with the DAX. It's not sort of sliding anymore, but it's just a significant move. And what with the COVID-19 infection rates really starting to pick up, and the press over the weekend, gosh, it didn't half make you feel a bit gloomy. But do we or don't we? Does the government tighten restrictions? Is there another national lockdown? And the debate rages, but it's definitely going to hit hospitality again, I'm afraid. So, and you've seen travel stocks being hit again this morning, Adrian, hospitality been hit. To what extent? I just don't think they can withstand another wave of, pushing the time when things start to recover way out. But the problem is, the government wants to try and keep everyone safe. But at the same time, mortality rate is not really picking up, and it certainly hasn't picked up in the way you would have expected, not like in March and April. Looking at what's happened in Spain and with their infection rate and the mortality rate. So it's difficult to know, and in France as well. I was trying to think of the other country. But
well, we've talked in podcasts many weeks ago about how you get changes in the strain of the virus, and typically what happens is as something becomes a stronger infection rate, the mortality rate tends to fall, and perhaps that's really what we're seeing here. It's certainly not the original strain, the Wuhan strain, certainly had a higher mortality rate than the European strain, and I don't really know where we are with things at the moment, but certainly it seems to be weakening a little bit.
Well, certainly from a survival instinct, it would be better if the virus evolved into something that didn't kill its host, because obviously that then prevents it being spread. But I'm not talking on behalf of the virus. You might, I might add, but that's sort of what you'd expect. But otherwise, yeah. See, I just think a lot of stuff is overstretched as well, and that's what.
Mm,
So the reaction you're seeing in the markets, it's just another bit of a body blow again. And I think markets, as we were talking, 10 minutes ago, Adrian, before the coming on here, um, they are stretched. We are a bit overbought. It doesn't mean that big tech is suddenly going to go out of favor, but it just needs to breathe a little bit, and you'd expect to see some profit taking after such a run up. I mean, that run up in August was mad,
absolutely it was. Yeah.
and there's got to be some sort of repercussion from that, but it doesn't make them bad companies. I'm talking about big tech. But look at what also happened with that company Snowflake last week.
Yeah.
The
Unbelievable.
was it cloud computing company? I
It's
can't.
cloud computing, and they had their IPO. They originally priced at $120 a share. And they've come in and they doubled during the first trading session on Thursday last week. One
Yeah,
one thing I don't know if I can't remember what valuation that puts them up at, around 70 billion, I think,
yeah,
doesn't it? But
yeah.
in January this year, they had a valuation of about 12 billion
Mm,
dollars. So that just goes to show how much the valuation has accelerated in these
gosh,
tech stocks.
some people in the know. I think it wasn't Goldman Sachs the leader in this one. I'm not. I think they were. And one of the guys in the workshop this morning said if they were, they'd managed to help a company come to the market who's now got a bigger capitalization than they've got,
Yeah,
and with virtually with very little revenue and no profits.
I know it's a totally mad
Extraordinary.
world, isn't it?
Yeah.
And there they are, Snowflake. They're going to be going. I know they've got a couple of USPs, but I know that the likes of Amazon Web Services will be looking to plug those and not make them so unique anymore. And when you're up against Amazon Web Services, you've got a pretty big competitor, right? So it'll be an interesting time for them. Certainly, as far as the stocks go, big sell-offs. Like Joe said, we can look at the chart here. We've got, the FTSE 100 gave us a short on Friday's close at about 6,000. It's now trading 5,817, so that's about 3% down. So that's a big sell-off in one day. And you can see it's one of the biggest candlesticks over recent weeks. Similarly, the DAX down about 400 pips. We had a short, it's a relatively aggressive short in fairness, but on Friday, but that's down about 400 points as well. S&P 500, we had a short, absolute textbook short on Thursday. That's now down best part of 90 big points. That's about 900 points, typically in spread betting terms. So a significant fall on that. And Dow similarly, another short there, around about 800 points lower from Thursday's short trade. So, these are big moves, and we've been waiting for them to happen. And the good news is our trend signal home traders are on them, which is great. What about the sort of the week it was otherwise? I mean, otherwise it wasn't actually much of a change on a lot of these indices, was it, until
No,
today?
no. I mean, it got a bit choppy post the FOMC meeting Wednesday evening. I just, the Fed didn't say anything wrong. They didn't, everyone knew they weren't going to change interest rates. They weren't going to change any their QE program. But I think there was a bit of disappointment. There wasn't more positive guidance, maybe. I don't know what people wanted. But actually, I just think it's people trying to read in too much into this. The fact is, this is good old-fashioned profit taking. But, we've woken up this morning and it looks a bit gloomy. I don't know about you.
Yeah.
It's foggy here. It just feels gloomy. It feels autumnal.
Does,
And there
doesn't
aren't
it? It
many.
was pretty cold. Taking the kids this morning, it was cold out
Yeah.
there, and yeah,
It,
I
it
agree.
just
And,
it feels less positive. That's all.
and I guess what they're probably looking for is a bit of a resolution on the stalemate they've got with Congress at the moment for the stimulus package, between the Democrats and the
Yeah,
Republicans.
and that's not going to happen. That's not going to happen before the election now. I can't think the Democrats going to go the extra mile to try and get this aid package through that can only help
It's only going to
Trump.
help Trump, isn't it?
Yeah, because Trump's certainly not going to do them any favors with the Supreme Court nomination that shouldn't happen before the election. So,
How how caring of them, how
yeah.
charitable that they're going to hold back on stimulus just so that the Republican president doesn't get in again.
Well,
Talk about a conflict of interest. I mean,
I guess there
that's
are fundamental differences though between the parties on what sort of aid. I think the Democrats are wanting to ensure there's a lot more aid, ironically.
Yeah.
But
Yes, that's right. I think they last time I read about this mid last week, and I think they're looking at sort of about 3 trillion, whereas the
yeah,
Republicans are about 500 billion. So they're
yeah,
way
yeah.
off,
That's,
way
it's just,
different.
I think it's more likely to be just over a trillion. But big numbers, but it's a big economy, and there's a lot of stuff they need to do. But that's the problem with the Federal Reserve agents. So, they're there talking about what they can do, but they're still waiting for the government to do its side. You've got
Yeah,
two pillars that prop up the economy. One is what the central bank can do in terms of monetary policy, but fiscal policy, i.e., government, they've got to work out what they put in, how they support businesses and the consumer,
spot
and
on.
how they
Yeah,
prevent, like we have in the UK, how we prevent businesses going bust in the interim, when in fact they're very good businesses post-COVID. When there's a vaccine, they'll be fine. It's just getting to that line, getting to that sort of situation. So, yeah, a lot of uncertainty still. We knew this uncertainty would persist there, but there we go.
let's have a quick look on the FX side. I know, and well, still indices, I guess, when we're talking about the Monetary Policy Committee. So, what happened there? So we had a meeting on Thursday, Jerry.
Yeah, I actually wasn't around for that. I was off into London. And when I saw the moves, I just thought, what on earth has gone on here? So sterling dumped and then rallied again. And it turns out that it was just this reference. The Bank of England was carrying out sort of planning, should they need to cut rates into negative territory. But the Bank of England had always said it was one of the range of options it would consider. So you'd think it would seem sensible to consider what the impact might be, but more importantly, how it
Yeah,
would be implemented. And on the
you'd be
back
a
of
bit
that,
worried if they hadn't considered that, wouldn't
well,
you?
that's right. And so it was just logical. If it is one of the options, the market knew it was one of the options, why wouldn't they work out how it could be implemented? Well, obviously on the back of that, sterling just dumped. It fell about 120 points, but promptly rebounded. So, we're sort of back where we started. And yeah, well, we're not now, but we were.
We're definitely not now. It's
Yeah,
definitely a bit of
yeah.
sterling weakness
Well,
today.
it's sterling
That's
weakness, but
for
it's
sure.
it's it's dollar strength on the back of the equity sell-off,
Yes.
really. So you
Yeah.
only have to look at the euro. I mean, euro sterling is a little bit higher, but really the big moves are in the dollar pairs, really. So euro dollar, sterling dollar. Uh, yeah.
Yeah. Yeah. The only one really bucking that is dollar yen, really, isn't it? Where you can see some sort of really good
Yeah,
continued strength on the yen,
well,
actually.
new prime minister, more positive noises coming out of the BOJ last Thursday. They upgraded their sort of take on the economy, and I think that's resulted in this just an astonishing move. I don't know what that is in terms of that's we haven't been at these levels for, gosh, have to go back to March, something like that. It's been some time. So yeah,
Yeah, we sort of nudge down on those lows in around the 11th of March or something. Yes.
yeah. So
Yeah,
so
fascinating. Just quickly, you did mention about the sort of considering the implications of negative interest rates in the UK. Just going back to that one,
mm.
is that a possibility? Is it a likelihood, Jerry? What are the money markets
Gee,
saying about it?
okay. Well, the forward. So these are contracts that are traded that are attempting to predict what rates will be in the future. So in sort of March, June, September, December next year, in roughly in a year's time, rates are expected to be minus 0.1%, and they're currently plus 0.1%. But I don't think it doesn't make it a shoe-in though. Well, not yet anyway.
Mm,
It's one of the options, and I've heard a number of very influential, clever people who are saying that they don't think negative interest rates would suit the UK economy because there are there's a lot of collateral damage, and the collateral damage obviously is to all the savers.
yeah,
But are we going to enter the realm where if you've got cash in a savings account, you're going to get charged? That's going to be interesting.
doesn't
That'll be
it just feels wrong, doesn't it? Just
well, yeah. That's
that's not to say it's not going to happen though.
you'd want to do something with your money, but yeah, you don't want to get charged for keeping it in the bank account. But that happens. That has been happening in Switzerland and in the eurozone.
Yeah, you want to do something with your money, but it's not right if all the pensioners are the ones with their savings. What are they supposed to do? Put them into
Well,
high risk stocks?
well,
It's
well,
not
well you've
a bit
just hit
reckless, isn't
that
it?
nail on the head. That's exactly what they shouldn't be doing, obviously.
Yeah.
Yeah, yeah.
Okay, let's move away from FX commodities. Gold I think we can blitz through this. Hardly anything really going on there. But
Oh,
what about the oils, Jerry? There's quite a big
yeah,
week on oil.
it's interesting. I mean, at the beginning of the week, I was just thought, yeah, oil's sort of written off really, but along came Hurricane Sally, along came a drawdown in inventories, which really surprised the markets. And at one stage, we were thinking that's it. I mean, the fact is that supply disruptions bolstered prices last week, Adrian, but it's
Yeah,
definitely weaker this morning. But it was quite a recovery in oil. Oil was up, I think WTI, so that's US oil, was up close on 10%. So it recovered quite a bit of what it lost the previous week, but
yeah.
not really near the. We're not back up to sort of $43, $44, which is where we were, 3 weeks ago.
Yeah, well, okay. I think that's pretty much it for the roundup. We'll be back in a few minutes with our next podcast, which is talking about the week ahead. But otherwise, we've got a few events on this week as well. So, of course, knowing about the news is great, but how do we trade it? How do we find the opportunities to pick up some profitable trades? Well, what you might want to do is come along to one of our live trading events. Now, we host a few of these a week where you can come along. We'll teach you a trading strategy. It's all hosted online. You can learn, you can interact, you can ask questions, and you can hopefully become a much better trader. And in these sessions this week, we're going to be talking about learning 3 simple rules to help boost your trading by identifying turning points, identifying momentum, and identifying trends. And we're going to be going through all of that in a live event. And if you want to find out the schedule for this week, just go to our webpage here. You can see it on screen if you're watching us, but if you're just listening, let me read it out. So bit.ly, so bit.ly/learnts. So bit.ly/learnts. You can book in a free place at our event, and you're going to learn some great stuff to help you to trade these markets. But otherwise, everybody, I'm going to call it an end to today's podcast. We'll be back a bit later on for the week ahead. But otherwise, tune in next time for more news and events on the FX and stock markets. Bye-bye for now.